Hi guys, it's Thomas here from COTbase.com. Welcome to this week's Commitments of Traders review. Today we're going to have a look at the 12th COT report of 2013, and as usual we're going to start off with the changes in commercials positions. So here we go. You can see we've got natural gas on top with a 29% change in commercials positions, an even larger 35% change in large speculators positions. The 2% change in small speculators positions, of course, is negligible. Here we go. You see the change sizes over here being much larger than average. All this happening after a really nice rally in prices. Question is, of course, if this is really a point where you can consider a short opportunity. But if we look at a, let's say, a 10 years chart to see this extreme, if there is any, of course, that may help us decide. So one of the extremes would be over here, meaning commercials at roughly 220,000 contracts net long, while the other side would be maybe over here, commercials being at roughly 80,000 contracts net short. So of course these would mean that we're at all-time extreme levels. Of course we can't always talk about relative extremes. We do see a couple in the past. We don't necessarily have to be at those levels, but I don't think that we really have such an extreme in natural gas. So of course that means that we may see the continuation of the trend in the COT report, meaning commercials may go down below the zero line and reaching levels of, let's say, 50 to 70,000 contracts net short before we really get to a significant extreme. So it's basically really the change size that may affect prices, and of course if they do, it means in the near term. Fed funds, the next market, 19% change over there in commercials positions, a 24% change in large speculators positions. What's interesting to see if you look at the COT charts over here is basically large speculators and commercials are holding the same amount of contracts. Okay, so they're at roughly 8,000-9,000 contracts net long, while small speculators are taking the short side of the market. Opening a 5 years chart, let's have a look at the extreme, whether we've got one. If you look at this 5 years chart, commercials were at almost 100,000 contracts when we could talk about a close to all-time extreme levels. So they're not there now, and of course they're way far from such levels at 350,000 contracts net short. So we don't have an extreme. It's really the change size that may affect prices, if at all. Australian dollar, the next market, 18% change over there in commercials positions. Large changes, it's a currency. These change sizes are larger than currencies. Let's open the 5 years chart and see the extreme. Here we go. You can see we've got one, a relative one at least a few weeks back. That was a buy signal, and the dynamics of this movement in the COT report is really large, and we're moving away towards levels of 120,000-130,000 contracts. In case of commercials, that may signal a sell opportunity. If you look back in time, whenever we had such extremes, that really coincided with tops in the price. So we're getting closer to those levels. We may see one maybe next week. Moving on to large speculators COT extreme, let's have a look at that. Whoa, only one market this week. Last couple of reports, we've been looking at a lot of all-time extremes in a couple of markets. We've only got one in the dollar index, so we're going to open that market, of course. And of course the 5 years chart right away. We had an all-time last week. We're still there. Prices managed to go a bit higher, but not significantly. So we may see a top in prices right now, if we, of course, believe that this extreme is at those stress levels that really put a top in prices. Moving on to Minneapolis wheat. 393 report extreme over there. Commercials and large speculators are net short. Only small speculators are taking the long side of the market. Having a look at the 5 years chart, really getting a look at this 393 report extreme in large speculators. So you can see they're even more short than over here in 2008. All of these signals, when commercials were at such levels, you can see that coincided with a bottom in prices. So when commercials get close to the zero line or even above it, that really puts a bottom in prices. So we're at such levels, of course, we may expect something similar to happen again. Copper, the next market, we have a 194 report extreme in large speculators positions. A bit different picture than the one we could see in platinum and palladium in the last couple of reports. So in this case, we're seeing a buy signal. Large speculators at a very significant extreme level, also commercials close to those levels, and you can see whenever we were at similar cases that put a bottom in prices. The really significant one was over here in the beginning of 2009. That's going to be our last market. I'm not going to show you any more markets, but of course you can have a look at our COT charts at our COT charts page. If you would like to have a more in-depth COT analysis, then you can check out our subscription service at cotbase.com, where you can add other really great functions to your table, look at new COT report types, data types, all sorts of really important and useful functions. So I hope you enjoyed my review, and I hope to see you next week. So have a great weekend. Take care. Bye-bye.